Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Karl, Thiel, and Keith Speights giving a 1 to 10 rating to a top 100 stock in the primary Hidden Gems database, and one you've probably seen in tons of ads recently as a medicine company. It's Eli Lilly, ticker symbol LLY. We'll talk about the strength of Eli Lilly's business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Karl has an 8. Keith, you're just a smidge higher at an 8.5.
Right, Anand. No stock is invincible. However, Eli Lilly comes pretty close. The company is the clear leader in the GLP-1 market, despite having significant competition, by the way. However, Lilly isn't focused only on diabetes and obesity. It's a formidable player in other areas, including cancer and autoimmune diseases. This is a rock-solid business.
Yeah, so Lilly isn't the first drug company to, or medicine company, I should say, to strike gold and find that a huge chunk of their business is coming from one franchise. Tirzepatide, which is Mounjaro and Zepbound, accounts for 60% of revenue at this point. That situation has often ended poorly in the past. You could see Pfizer with Lipitor or Pfizer again with the COVID vaccine. You can see Bristol-Myers Squibb. They often panic and do a mega merger of questionable value when they're this concentrated and they're seeing a threat. Lilly's a really long way for the threat. There's no generic tirzepatide for at least a decade. And I will say part of what I like about it is it just has a really different culture than a lot of big pharma companies. I do think this obesity boom is going to cause some asymmetries in the business, but I think they'll manage it well.
It's the curse of success a bit, right? You'd rather deal with that than your drug failing. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Karl's got an 8.5. Once again, Keith, you're 0.5 higher at a 9.
Right. I was looking when David Ricks became CEO back in 2017, Lilly had a market cap of around $82 billion. That was only a fraction of the market caps of companies such as Johnson & Johnson, Pfizer, and Merck at the time. Today, though, Lilly is the biggest medicines company, drug maker on the planet. Actually, it's the biggest healthcare company on the planet. It has a market cap of around $950 billion or so. It briefly topped the $1 trillion mark. Now, I know share price and market cap aren't everything in evaluating management, but it's hard to argue with that kind of success.
Yeah, and you may have noticed that Eli Lilly just has a name. It doesn't have some compound mouthful like Glaxo, Burroughs, Wellcome, Smith, Kline, Beecham. So, I'm going to kind of harp on this, but Lilly has this culture that has avoided these big mega mergers and is focused really internally on its development. David Ricks inherited that from the former CEO, John Lechleiter, and is somebody who's come up through the company for a long time. He's a marketing guy, not a scientist like Lechleiter. And he isn't responsible for the early development of tirzepatide, but he is responsible for a key decision they made, which was to test it early on head-to-head against semaglutide instead of placebo. And that is a huge factor in how big that franchise has become.
Yeah, and to Keith's point, if less than a decade, if you've 10x the company, that makes shareholders pretty happy. For financials, a 10 is a fortress, a 1 is yikes. Both of you have 9s this time, Keith.
Yeah, there's really not much to dislike about Lilly's financial position whatsoever. Revenue soared 64% or so year over year in Q3. Adjusted earnings per share jumped 20%. Lilly has a really solid cash position. The biggest ding against this stock, and in my opinion anyway, is its debt of around $43 billion. But honestly, Lilly shouldn't have any problem servicing that debt, so that's not a big ding whatsoever.
Yeah, totally agree with Keith. And I'm just going to add that the debt is overwhelmingly from building out manufacturing capacity rather than things like share buybacks or acquisitions. So it's not leading to a bunch of goodwill on the balance sheet. It's leading to, future reduction in taxes, basically, and a ton of capacity, some of which will be, very dedicated to peptide manufacturing, which could potentially be overcapacity at some point. But a lot of it's just about making pills that they can be flexible with.
Right on. I'd never heard of it, capital expenses like that, reduction in investment and future reduction of taxes. It's kind of like the Roth IRA of how you allocate capital.
That's a sunshiny way to look at it.
Right. Karl, let's talk valuation. How well will Eli Lilly stock do over the next 5 years, and how safe is it? Keeping in mind a 10 is a sure thing and a 1 is a lottery ticket.
Yeah, I said 5 to 10%. It's really hard. I've had nothing but nice things to say about Lilly, but it is kind of currently priced for perfection in a market where competition intensifies by the day and downward pricing pressures are massive. Tirzepatide has plenty of growth ahead of it, but is it enough to justify a drug company trading at 14 times sales and close to 40 times forward earnings? I mean, maybe. They do have the best obesity pipeline. They have the manufacturing and logistics they need. But you have seen already in the past how susceptible this stock price is to any hiccup in the obesity market. Tirzepatide's patent is of no concern to me. It's that something better could come along. I think they can keep moving up from here, but I would give them a safety score of 4 just because I think they'll be volatile.
Yeah, I'm more bullish about Lilly. It would not surprise me for the company to deliver double-digit returns. Mounjaro and Zepbound have plenty of room to run. As Karl mentioned, the company has a very strong late-stage pipeline that goes beyond obesity and diabetes, by the way. I'm going with a safety score of 7. I think that's warranted for a double-digit return. There is always the possibility that a rival obesity drug could come along that really performs well in late-stage clinical studies and in the marketplace. It's also possible that one of Lilly's pipeline candidates flop in testing, but overall, I think the opportunities for the stock are really, really good.
One little math thing, Karl was talking about 14 times sales, but close to 40 times earnings. That's massive profitability when you're at 14 times sales and you're still I'll say only, but 40 times earnings, or not even. Thank you to both Karl and to Keith. They've given Eli Lilly a strong overall score of 7.6 out of 10. It's that valuation that keeps it from the 8.0 that would force me to buy shares. Keith prefers Vertex Pharmaceuticals as a top it, and Karl prefers Roche. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Halozyme Therapeutics. Till then, Fool on.